You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views.
Old trading walks into a bar. New trading raises it. Unlike some guys, Tastytrade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tastytrade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tastytrade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tastytrade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means we are back. It is Friday, time to rock out on another edition of Volatility Views. My name, of course, Mark Longo from the Options Insider Radio Network, your home now for over 19 years of all your favorite options podcasts. Yeah, we kind of got this whole options podcast ball rolling way back in the day when you had to put it on an RSS reader or even an iPod before there was an iPhone. And fast forward a few years, we're still kicking, still growing, all sorts of fun. Next year, the big 2-0 should be a party. In the meantime, make sure you subscribe to the full network. Otherwise, you're missing out. And if you're not hanging out in the pro, you're missing out on things like Volatility Views and the upcoming Vol Deathmatch 2.0. Vol Deathmatch 1.0, quite a banger. I expect even more fireworks, perhaps even, dare I say it, more bloodletting from the Vol Deathmatch 2.0. Check it out. TheOptionsInsider.com/pro is the place to go as we go around the horn, see who's joining us for a Friday edition of the old Vol Views. First, out to, who knows, is it the hinterlands of Chicago or is it the newly minted Volatility Lake House? We will find out as we are joined by the once, future, and present Dr. Vix, a.k.a. Mr. Russell Rhoads. Mr. Rhoads, welcome back to the show. Where are you beaming in from today?
I'm beaming in from the lake house, and since you brought that up, I had a very nice conversation with a friend of the show, Brian Overby.
Oh, that bastard.
I'm getting all kinds of advice on how to, he's got a really cool doc that he took a abandoned pontoon boat and blah, 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 and showed me, and probably sent me 30 or 40 pictures of the whole process. Yeah, I'm going to call somebody to do that. But, but I just, he seems to be doing very well and said hi to everybody. And
I always joke that he's living that Sonny Crockett lifestyle. I used to joke all he was missing was the alligator, and he had the full Sonny Crockett living on the boat lifestyle going.
Yeah.
Then he went and had a kid, and it screwed the whole thing up. Then you need a house and everything else, you know. It kind of
changes. You can't have an alligator on the boat with kids.
Yeah, kind of hard.
They'll eat your infant. They'll eat the baby.
And then also joining us from the Southern Volatility Mecca, known as Austin, I do believe the kitchen of the Southern Volatility Mecca, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show, sir.
Hey, good to be here. Nothing to talk about this week. No action.
No action
we might as well
at all.
Might as well cancel the show.
Might as well cancel.
Let's just talk Masters of the Universe for 45 minutes.
Hey,
that'll be more.
Do not tempt me. Do not tempt me. I can hear people in the audience right now. Click, turning it off. Don't worry, we're not going to.
You know, many will not be surprised, but may not know. I'm also a huge Muppets fan. So
I did watch that last night. I did watch the return. That was fun.
It was great.
It's fun to see the Muppets back in their appropriate format, which is a ridiculous variety show. That's what the Muppets are. All these other formats, they don't really fit, but the Muppets are a variety. That's what they are. All you need is the reincarnated corpse of John Denver. Would have been complete. There we go.
Yes, only way to make it better.
All right. With talk of reincarnated corpses, the show hasn't even started. Let's kick it off with the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, let's get down to business. A little bit of the old vol review, and man, what a Friday we have. What a week we had. You know, it seemed like the route was in. You couldn't really catch a bid to save your life in most of the big tech and AI names. Certainly not in anything crypto related. And yesterday, just a ton of blood on the screen. Pick your poison. Equities, crypto, metals, all the big products and asset classes everyone's focused on these days, all getting annihilated yesterday. And then lo and behold, we come in today, even with Amazon completely screwing the pooch in terms of earnings. I mean, they had a decent number, but of course, the spending, again, is what everyone's focused on, and the spending is getting just completely out of control. We're talking the GDPs of many third world nations just being thrown at AI servers. The street not loving that. Even with all that baked in, we are seeing the mother of the rallies out there today. S&P up nearly 2%, by 1.75%. The Dow up over 2%, about 2.15%. The NASDAQ up exactly 2%. And our old pal VIX Cash, after kissing a 23 handle earlier in the week, starting to look spicy, starting to look like maybe the fix was in, maybe the red was here to stay for a little bit. Again, getting just annihilated again today, below an 18 handle. Now 1785 as we kicked off the show. Still somehow miraculously up on the week, but it's up about a quarter of a point. We could have been up 4 or 5 handles, but no, up about a quarter of a point. Volley, the at the money, just the facts, ma'am, vol edition, 14 3/4, up about a third of a point. VVIX at a 103, actually down one. We got as high as, I believe, 119 in VVIX earlier this week. So it was a wild journey across the board. Out to crypto. Crypto bouncing after Bitcoin hitting the 60K level last night, then rebounding, taking a lot of names like MSTR and MSTU. I think some of our chat will be interested in that. MSTU, a backup with it today. Just absolutely wild stuff. Let's go around the horn. Mr. Meatball, we will start with you, sir. What is catching your eye? Well, first off, before we get to today, what was catching your eye, I should say, in this complete rout we had going on earlier this week, and then today, the mother of all reversals, sir?
I mean, I think at its core, this was, the market's ills were not nearly as ill as what people think. And it was not the route that people think. As the headline SPX and Qs were getting murdered, equal weight and the Dow and the Russell 2000 were actually holding up really, really well. In fact, yes, the market is reversing. The Dow is at a new all-time high today on Friday. Equal weight S&P 500, you can look up the ticker symbol RSP if you want to see it. That is at a new all-time high. Dow have real strength in the Russell 2000. You know, the way to really look at it is there is an ETF called MGK, and that is what the 80 biggest stocks in the S&P 500. That was where your route was. And it was the top 10 names where they were selling in Microsoft, Meta, Amazon, you know, Mag 7 adjacent names like Palantir. That was really where the selling was. So like think software and these giant tech. But at the same time, that money wasn't disappearing. It was going into all the other sectors. Look at the strength in energy, utilities, industrials, healthcare, housing, materials. Money is distributing itself away from Mag 7 and into the market as a whole. And that is really what is at the root cause. So we saw VIX responding to the top 10 pieces of the index, while really the 490 are not in bad shape. In fact, I might argue they're in great shape. And so, you know, we kind of complained over the last, over what? All of 2024 and 80% of 2025 that it was 10 stocks pulling the rest of the market higher. And really, broad market stocks were not doing very much and looked awful, looked bad. That has flipped. That has been flipped on its head. And, you know, right now, I don't see an end in sight in. The other piece that's really interesting is the consistent memification of this market. We see kind of memification jump from asset class to asset class, right? Obviously, the original meme was GameStop, but then we jumped into Bitcoin, then into, you know, I think security software did that. Then it jumped into gold and silver. Then it was into memory. Take a look at a chart of SanDisk. If I showed you a chart of SanDisk and then remove the prices and said this is GameStop, you would say, of course it's GameStop.
Have you tried to buy a memory card lately? My God.
Yeah. Yeah. I mean, there is, and so that has been the root cause, the root of what this week was, and really, I think the top end selling was related because the same firms that are heavy in those names also tend to have some Bitcoin. And we've seen the Bitcoin Band-Aid get ripped off. Yes, it's having a recovery today, but this feels very dead cat. I think MicroStrategy needs to go completely into receivership before Bitcoin finds an actual floor. I made a joke on, I don't know if you saw my little tweet on Twitter, but you know, someone posted a picture of Michael Saylor sitting in a leather chair, you know, in a room by himself, and it brought me memories of the optionsellers.com guy with his watch, and it is like uncanny how the images look similar, and you know, I think that these Bitcoin trusts need to go belly up, and then you might find a floor there. But
they're only about 17% below their average buying price. What's the problem? Their debt doesn't come due till next year.
Galaxy Digital, Galaxy Digital is 50%, I believe, below its purchase price. MSTR is one of the better ones with that purchase price. Most of these guys own it at 90, 100, 110.
Yeah, a lot of them got caught up in the frenzy, yes.
Yeah, and so that asset class probably needs to go the way of the dodo before Bitcoin kind of normalizes, and ETH probably the same thing. I think these treasuries have been nothing but a nightmare. You know, if you like MSTR, and then go buy their convertible debt, because that's going to be backed by their actual crypto holdings. Don't bother with the actual asset, because it's not an asset.
But the CFO isn't concerned, Mark. He's not worried at all.
When you buy an MSTR, they're basically selling you their leverage and paying themselves.
Yeah, I've never been a fan of buying another company to buy another asset for me. I mean, I could go buy Bitcoin if I want.
That is silly.
That to me, that's the whole Cathie Wood argument. I can buy Tesla on my own. I don't need to pay Cathie Wood to buy Tesla or whatever other stock she's throwing in there. But yeah, that to me has always been kind of interesting. Obviously, if there's an active management component, if you're running a fund, that's a different thing. If you're just going out and buying Bitcoin for me, I think I can do that. on my own and maybe hedge it. Dare I say it with an IBIT or something like that. So a lot going on out there. Mr. Rhoads, a wild week. Seemed like I was saying earlier, maybe the fix was in all the way through till the close yesterday. By the way, I have to give credit to my buddy on Twifo yesterday, Mr. Dan the Man Gramsley. He came in calling this today. He said he's looking for a strong green move in the equities and everything else today, and he was pretty much spot on. So he was on the bleeding edge of that. But Mr. Rhoads, sir, what caught your eye earlier this week as vol was popping, and what's catching your eye today now that it's dying again?
I got to say, Dan Graham, I know you. I just got to say, Dan Grahamson, not only is he one of the nicest guys on God's green earth,
he might be the nicest guy in this business. He's almost offensively nice. He's so nice.
He talked me off the cliff a long time ago once, and it was just, and he didn't even know me at the time, and it was just one of the nicest things ever. But also, I would say he's, because when you're talking about 1, 2, 3 days out, swing trading always pops in my mind. And I always feel like he's one of the better swing type traders as well that can do as far as a 2 or 3 day outlook. I followed a lot of things that I've heard him say on your programs in the past. So great guy and really good at what he does. I thought this was going to be the anomaly week where when I pulled up the 5-day intraday chart, we would be closer to the high as opposed to, closer to one of those spikes that we tend to see midweek, and then we work our way back down from. We got one on Tuesday, one on Wednesday, one on Thursday, closed kind of high Thursday, and then we all should have listened to Dan because everybody's buying on weakness today. Kind of shocked at how much VIX has given up. You would think that all the troubles in the world are not instantly behind us, and weekends are always fraught with risk. So 17 handle on VIX a few minutes ago, still there. I was kind of surprised at that. You guys can tell by seeing me on the camera. I just woke up from a nap. When I got my nap, we had a 19-something handle. So that's what you get for sleeping on the market, especially the VIX market.
Speaking of sleeping, I saw earlier in the week one of our pro members did your weekend UVIX trade, and then, as I have actually done once or twice, forgot that he had it on Monday, and so it ended up working out pretty well. I'll have to see where he got out of it. But he got out of it midweek. So it was actually a pretty good.
It's been interesting. I almost think you want to look at doing that trade on Monday night and then selling it Thursday night, because we have been bookending rally. So rallies are on the bookends. You have Monday and Friday rallies, and then Tuesday, Wednesday, Thursday they dump everything they can.
Okay, what is it?
I feel like that's been the trend for the last month.
Mark, Sebastian, what am I testing right now?
Buy UVIX end of the day on Monday, sell it end of day Thursday. So you can do Mondays close to Thursdays.
You just don't own it on Fridays?
You don't own it. You don't own it on Fridays.
I got it.
Yeah, and you don't own it all day Monday.
I'm gonna play with numbers as we're talking.
I think the last
numbers, I just got to change something a little bit.
The last month or two that would have worked great. Interestingly, I was looking at VIX options yesterday, Russell, and just knowing how quickly this thing has been going up and down, I was looking at the VIX February. I want to say the 17 puts at the close yesterday were like 10 cents. Something like that. Might have been the 16 and a halves. So I said, you know what? I'm just going to pick some of those up. Bought 50 of them for fun for 9 cents. And I think those might, by the end of Monday's bookend, this thing might be back below 16, and I might get to flip out of those things.
That has definitely been the play. We talk about the difficulty of monetizing your upside. You had a little bit longer this week to monetize your, granted, not that when the cash was threatening the 23 handle, you didn't have that long of that apex, but you had elevated above 20 for a decent amount of time this week. But that has definitely been the play. Whenever we get the bids just involved, just go out and load up on all the downside you can in VIX. And usually you don't have to wait that long. It's less than a week and it comes back to you pretty aggressively. But interesting stuff out here. So Russell, I guess the takeaway is your secret weekend UVIX trade is no longer secret and no longer a weekend trade.
Well, we may be doing it different days. We'll see how it works. It worked slightly over the weekend, this past weekend. It would have worked better for yours truly if I had not, and I backtrack it. Cue the tape from last week. I did say, yeah, I'm going to buy it on the close today, it basically. I ended up breaking even on it because I got in at a bad price, but got out.
I was thinking about buying it early last week too, and I did right after the show, and I got a decent. I did it during our Options Oddities show, and I got a pretty decent fill. But UVIX kind of sold off right before it rallied again. So yeah, it ended up working out pretty decently. I didn't have the midweek exit that some of our pro members did, but I usually don't run. I don't run my deltas on UVIX for that long. That's kind of a wild game. That said, UVIX at this lower level, not quite the untamed beast that it is when it's, let's say, north of a 30 or a 40 handle. Speaking of untamed beasts, let's go out to the vol surface this week, listeners. What's going on in the term structure on the futures? And this is another one where if you wait 5 minutes, you get a little bit of a different story. As we're coming into this portion of the show, seems like things have kind of settled in to their groove, which is any bid that we had to that front Feb future is pretty much gone. It's up less than 1/10 of a point now. So all that juice that got backed into the front of that curve is pretty much been squeezed out now, listeners. It's up, again, less than 1/10 of a point, so pretty much unched on the week. March is actually down now, down nearly 1/10 of a point on the week. And if we go all the way out to the end, let's go out to that seminal time frame right around heading into the midterms. Let's go out to October. That's at about a 22.35. That puts it up exactly 1/10 of a point from where it was this time last week. So once again, we've said this many times, if you just listen to vol views, you pay no attention to the rest of the vol market throughout the rest of the week, you would think it's yet another boring week. I see you laughing, Mr. Rhoads. You would have no idea the dust up that we had in between, sir. What's catching your eye on our literally unched curve now?
Yeah, you guys remember that silly movie with Steve Martin where he's a weatherman and he tapes the weather before he goes on vacation? He's a weatherman in Southern California, and the weather's the same every day, so he tapes the weather. And, of course, they have a monsoon when he goes out of town.
Is that L.A. Story? That's the one, I think.
Yeah, yes, L.A. Story.
Yes.
So I feel like sometimes we could do this program like that. We could tape it ahead, or you could just tape me saying, the week over week is really not giving you an idea as to what happened during the week. Because when I would do the weekly blog on the CERO site, maybe once every couple of months I would use that phrase, but it seems to be extremely common right now. And it looks to me, when I'm looking through the tape for the weeklies, of course, the weeklies are mixed in with everything else. And it really does look to me that when we get these moves higher, that people are jumping on them. You just see a lot of people trying to buy the puts or, sell a short dated call spread or something like that. So, you were joking that my UVIX trade isn't a secret anymore. Selling VIX when it works its way up midweek, that doesn't seem to be much of a secret anymore as well. And we've gone through patterns like that. And I know that it didn't quite work the same way it has in previous weeks this week. But I remember being on here with Bill Luby once years ago, and we were going through a pattern like that where everybody was kind of nervous about the markets. Lots of things that could potentially be hitting the markets, but nothing seemed to be doing that. Everybody seemed to be a bit on edge. And you'd get these, VIX moves on very little downside or not overly significant downside, but they were extremely short-lived. And what Bill said is you're just going to have to see, like a back-to-back one that wipes enough people out that you don't have those people trying to sell the volatility in there on every single spike and maybe suppressing the options a bit and making the options look a bit attractive, but they end up not working out because we keep following that pattern. And then you guys mentioned the software thing, the sell-off we had earlier this week. I do think that's an indication of just how edge on the markets are, how on edge the markets are right now. It just doesn't. You don't want you don't want Tuesday to be the next Balmageddon and you're the last one out the door, even the middle one out the door.
Yeah, Russell, there was I don't know if you saw this. There was you'll like this spread. It's trading 80. Trader bought 14,000 IGV April 90, 100, 110 call flies.
Yeah.
Looking for, because and I'll tell you why I like the trade. One, you're buying a bottom, right? Two, the vol's really high. So this is a way of kind of owning upside without having that Vega exposure when we invariably do get a rally. So I kind of like that, but my take is I'd rather just play directly in Microsoft than buy the ETF. Yeah. But if you want to trade the whole sector, IGV that call fly I kind of like.
Interesting. Let's see what else we like out here. Oh, by the way, really quickly before we get out of the futures, Mr. Rhoads and Mr. Meatball, if you have thoughts too, it has been a frequent talking point for a while that the futures can't catch a bid from a volume perspective. Well, the numbers in from our friends over there at OCC for January, and surprise, surprise, people actually traded some VIX futures in January. I mean, not a ton more, but any increase is notable these days. We were at about 4.4 million a year ago, 4.58 million, so up a little over 4, about 4.1%. So maybe, Mr. Rhoads, maybe we have finally bottomed out and people are actually trading VIX futures again. What do you think?
Very much of a possibility. That we've seen some of the VIX futures volume is going to come from the option market, just through the hedging that the market makers have to do, and I know we're seeing decent volumes there. But when you've got these situations where you're trying to, people have been trying to buy the 16 or 17 puts and not doing particularly well, being short volatility, maybe they're turning around and using the futures for those sorts of trades right now, because we've noted how difficult it has been on some of these short VIX trades to try to use options to do them. And I have noted in the past 2-3 weeks that people seem to be that there seem to be more and more short-dated call spreads in addition to that put buying. Well, another alternative and one that I like is a calendar spread where you short the front month and go long the second month. So maybe maybe that's where a lot of that activity might be coming from, just in lieu of the options.
Since we're talking new activity and new products really quickly, I got to get both of your thoughts on this because it is a very much an auspicious week. We've been all genuflecting at the altar of zero DTE for the better part of the last 3 years now. We got some new flavors now. We've got the Tesla. We've got all the ones people have been asking for. We got them. They started trading on Monday. We had a Wednesday. Now we have expiration, obviously, today as well. So I'm curious, Mr. Meatball, maybe we'll start with you. Have you or any of your crazies over there in Pitland dipped your toes into any of these zero-day single-name equities? And what do you think in terms of impact on, let's say, the big index 0 days or even Valser?
We haven't seen we've not seen it have an effect on SPX at all so far. It has taken away it's pulled some volume from the regular Friday weeklies, but it's net been additive. So, it's been fun to watch, and Alicia and I have been, Alicia Leslie and I run our Zero DTE program at Option Pit. We've been kind of studying these. We've been kind of trading them, test trading them. I'm actually going to start running a beta trade on these next week. So I'm going to be beta testing kind of an overnight strategy, because the one issue with this is you buy it, these aren't cash settled, which I still am why didn't you run this as a cash settled program? It would have been much easier. You would have saved people a lot of headache, made the market makers' lives a million times easier. I already know a bunch of people have had accidental delivery at this point. I think they're going to be net additive. They're not pulling from SPX, which is a positive. And these are going to be a pretty nice boon to the owners of, some of the major equity exchanges, right? Everyone knows the SIBO is the biggest options exchange. It's not the biggest equity options exchange every day. A lot of times it's the Amex, or it's ARCA, or it's PhilX. Now, PhilX kind of cheats because they put up all those ridiculous things. So PhilX is not.
How dare you say div plays are not real volume, sir?
They're not real volume. But most, ARCA and Amex on a regular basis are doing in real volume as much as SIBO and equity. So, I'm interested to see how this, what this volume does to goose the actual stock prices in NASDAQ and in the Intercontinental Exchange. I'm not going to use its ticker symbol because that's a flashpoint. But I think those may see a nice boost in earnings from these. SIBO might get a little bit of it, but I think it's mostly going to be in NASDAQ and the Intercontinental Exchange.
Yeah, it is kind of democratizing the zero DTE flow out of just SPX and into some of the other names. Mr. Rhoads, do you have some thoughts, sir?
Yeah, I know I've been through this process when I was at SIBO, and I'm close to the guys at NASDAQ, so I did talk to them a bit about this. And it turns out they kicked cash settlement around, but when you do these things, you put in an initial proposal. The SEC comes back and says, we would be more favorable if you would do this, this, and this. And I don't know if cash settlement got in there, but I do know that if you've noticed, they will not have an expiration on a day that they have earnings.
Yeah.
And that was probably the biggest compromise, which is really funny because when I was at the Chicago Board of Options Exchange, I proposed earnings options in a meeting, and which make a lot of sense, but options that expire the day after, not the day of.
So you have to protect retail traders from contrary exercise and assignment. A lot of these traders, a lot of retail don't understand that if a move happens after the bell, but before 5 p.m., you can absolutely get assigned on your shorts, or you can get forced delivery, and I would venture to say 90% of the retail world doesn't know that. Maybe 95.
Probably higher, yeah. I mean, look, most of them have come in post-pandemic. They haven't had to experience any contrary exercise.
After hours moves are going to happen regardless, but taking away the one event that we know is going to be problematic. I think is a good idea. Also, I think that you're playing with fire on insider trading on these earnings plays. Although this cycle, if I could literally tell you the earnings of every major player, and you still would have no idea what they were going to do.
You have been wrong on a couple of them, definitely. Apple, definitely. People were loading up to the upside. They were disappointed. There was a lot of fun stuff out there. But you're right. There was a lot of debate around cash settlement with these. I know the market makers really wanted the contra exercise. They wanted to preserve that option for themselves, pun intended, even if it does come at the expense of retail.
Of course they did. Those
and that's the way it shook out. So we shall see out there, listeners. We have done, if you're concerned about that, if you're not familiar with these terms, we have done our most recent episode of Options Boot Camp was all about contra exercise. So definitely a thing. There would have been education either way. There would have been education on cash settlement where, I thought I sold the Apple physically settled option. I accidentally sold the cash settled one. There would have been some education there. You would have had two chains kind of side by side. So that's not really ideal either. So I don't mind the way they went, but there definitely will be some growing pains. That is for sure. Speaking of growing, are we growing out there in the VIX options volume right now? The answer is most decidedly yes. A pretty hot day out of the gate, especially when we compared what we've seen, last week around this time. Nearly 500,000 contracts already. That sounds pretty good when the ADV was around, 750,000, but it has been shooting skyward this week. It is up another 103,000 contracts a day. It's at 920 right now, which I've said many times, if you look at no other indicators to tell you that the game is afoot in the markets, when VIX options are threatening 1 million contracts a day, something is up. It might be worth sitting up and paying a little bit of attention, and we are getting perilously close to that level again. Speaking of levels, we are still hanging out 8-2 calls over puts in VIX top 10, which is pretty much our normal structure out there. We kicked things off. 174,000 is what it cost you to break into the top 10 this week. Our first name here is our first put. We got 174,000 of the Feb 18 puts. Those were looking terrible earlier this week until they weren't. Number 9, $1.76 of the Feb 30s. Number 8, $1.85 of the March 25. So already quite the smattering of strikes and options just in our bottom 3. Number 7, 201,000 of our old pals, the Feb 47 halves. Number 6, 202,000 of the, if the 47 half is too weird of a strike for you, how about the Feb 50s? That's number 6, 202,000 of those. Number 5, 210,000 of the, dare I say it, reasonable Feb 20s. Number 4, 231,000 of the Feb 16 puts. We were talking about these earlier this week. This was the subject of one of our flash polls. I'll have to go dig up what the price was. Maybe our producer can find that flash poll for me and put it here in the notes. But I think they went up, was it around 28 cents, somewhere in that ballpark? We were asking you folks if you were down for these. Or actually, it might have been March. It might have been the March 16 puts. Either way, 16 puts lighting it up 231,000 times. This time in February, maybe we've all learned that 15 is a bridge too far on the dark side. But 16, you might have a chance. Either way, number 4. Number 3, 282,000 of the March 35s. That's too far out in time for you. Allow me to present number 2, 307,000 of the Feb 35s. And the big dog, yet again, this remains the king of the roost out here in VIXland. 449,000 of the Feb 25s. You might have thought, given this little pop we had earlier this week, maybe if they're long this as a vertical, maybe they took some of it off, but it looks like they've added more since we talked last. All right, listeners, it is time now for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
Mr. Rhoads, what you got for us, sir?
Sure, I've got, I'm just glad Mark Sebastian didn't sing it. Okay, Monday with VIX at 1619. This is probably the most unusual weeklies trade that I will ever talk about. VIX was at 1619. Somebody bought 8,000 of the February 25th 20 calls for $1.35. They sold 5,600 of the 23 calls for 94 cents and sold another 1,600 of the 32 calls for 45 cents. This cost them a little bit. The break even is around 20.50. Cost them about 50 cents or so if you call it an 8 by 5.6 by 1.6 spread. That's the only way I can do math with this thing. This morning, as I noted, VIX was much higher, and then I took my mid-morning nap. But with VIX at 1940, I'm not going to go through all the legs, but they were up on this spread at about 46 cents per spread. Even though we had gone from 16.19, we were up 3 points, and they'd made 46 cents on this. I mean, the 20 calls are still out of the money, and they were up 45 cents just on the 20 calls. So if they just bought the 20 calls by themselves and not done all this other crap, they would have been fine because the other two kind of offset each other. So it does very well. It's very leveraged between 20 and 23, which kind of makes sense. And then between 23 and 32, the angle flattens off a bit. Then when you get up to 32, it's about 1-for-1 with VIX. You still have a few more long calls than short calls, but I kind of can understand what you might be thinking here. You take a look at, well, how high has VIX gotten with some of these recent spikes? Well, 23, 24, 25 or so. And then, but I still want to benefit if it takes off to the upside, but I want to lower my costs. Maybe I sell at 32s. It looks like they still completely have this trade on, but it's a very unusual one. It's kind of tough to talk about without a visual in front of everybody.
They did all this work. They structured this, and then they didn't take it off?
No. And last I saw, they hadn't taken it.
So had they not listened to any of our shows?
These are the February 25th, so they got some time. This is not next week.
They got some time. That's true.
If it were next week, I would have expected, I would hope they would have gotten out on Thursday. So there. Tuesday, this is a trade this is a continuation. They're not being very stealth with this. It's really funny. I wrote something up about a stealth trade, and somebody instantly told me how traders try to hide their trades. And I'm thinking, yeah, I've never looked at the tape before. On Tuesday with VIX at 1712, somebody sold 2,497. This is the size that I mentioned last week as well. of the February 4th 18 calls. They took in 26 cents, and they bought 2,497 of the February 11th 18 calls for $1.09. I dug. I have not seen an exit. I'll keep digging. I was kind of hoping on Thursday that maybe they had monetized this one, because I think they've been rolling it, and they've been doing this for a while, including the standards, which I would have missed in the way that I go looking at the weekly. So somebody's been kind of leaning on those 18 calls for some sort of tail protection for a time, and they've been rolling them on the Tuesday before expiration for at least a few weeks. Wednesday, we got a fly with VIX at 1880. Somebody bought 681 of the February 11th 15 puts for 3 cents. Sold 1,362. That's two times 681 of the February 11th 17 puts for 29 cents, and bought the 19 puts for $1.36. You've got an 81-cent cost there, and a profit if the VIX settlement next Wednesday comes in between 1581 and 1819. I kind of like that for where we've been landing.
I was gonna say I don't hate that one.
I would hate it for them if we overshoot 1581. I really would, because that's where nobody's been making the money. And God, I really hope this isn't somebody that's been buying puts and not benefiting from really low VIX and said, let's try something different this week. And then we get a $14.99 settlement.
The only bad part is they had to buy some 15 puts to hedge it. I get it. It's only 3 cents, but still, the 15 puts.
Oh well. Maybe you should have gone down to the gone down to the 10s or something.
I'm just kidding. You could spend 3 cents on them. Why not?
Well, why wouldn't you maybe do the I don't know. Why wouldn't you maybe do the 14s just to give it a little bit room to run just in case? I mean, but of course, VIX was at 1880 at the time, so how much room did we have to run? My wife's favorite number, VIX at 22.26. She grew up at 2226 Street. With VIX at 22.26, somebody sold 3,000 of the VIX February 11th 18 calls for $3.50. They bought 6,000 of the February 11th 21 calls for $1.95. This cost them 40 cents. So they only do well. And see, if I do something like this, I want to do it at a credit. So if VIX doesn't do anything,
you got to get a credit for this. Yeah.
But they did it at a debit. So their break even is all the way up at 24.40. And they did this when VIX was already on the run.
Yeah, they did it. They got the idea way too late. You did this on Monday, you're looking good. On Thursday, it's too late. You're catching the other way down now.
Yep. And then today, I just, because we beat up on the 15 and 16 puts so much, maybe there's somebody that has given up on the 15 puts and they did this. With VIX at 1930 this morning, somebody bought 400 of the February 11th 15 calls for $4.65.
If that's the lesson you take out of that,
I'm really sorry if it's a listener. I'm really sorry if it's a listener. I don't like. You could. There are people that do what we do that will look at trades and just be ugly about it. And I feel like we do criticize trades, but we're not. We're not mean about it when they don't make sense to us. I get what you're doing with this one. Especially after yesterday, maybe I've got a good shot to be long volatility over the weekend. But unfortunately, that one's not working particularly well as the day goes along.
If that's the lesson you took out of us mocking spending, 30 cents for the 15 puts, you decide to buy nearly $5 15 calls, then you were not listening to the show at all. You could do a whole year's worth of the 15 puts and still be less than this. My God. Wow.
I know. If the puts didn't work, let's do the calls.
Yeah, let's go exponentially more expensive in the other direction, because that works. Wow.
I don't think that's what they were thinking.
I don't think so either. But that brings a smile to my face if that's the lesson they took. Well done, Mr. Dr. Vix. Let's go out to the land of VIX options now. Kind of a banger week, listeners. A hot one out here. Like we said, today, already over 500,000, about 540,000 contracts now on the tape. The hot option out there today, almost 51,000 of the 17 puts. You got a nice little put strip lighting it up today. Go figure. Vol's dying. The average price for those, by the way, 26 cents. So maybe you like those. Number 2, 30,000 of the Feb 18 puts for 61 cents. Number 3, 24,000 of the 19 puts for $1.25. Again, puts all day, all the time. Number 4, 23,000 of the 18 half puts, about 90 cents. And number 5, 19,000 of the Feb. So if you're tired of all this, excuse me, not Feb, April. If you're tired of all this Feb talk you want to get a little bit of duration. The April 19 puts went up today about 19,000 times. If you're wondering, $1.86 for those bad boys. So you're getting some duration at least. Now, that said, there is some OI on this, so these could be closing. But interesting stuff. Yesterday, one of our banger days of the week, over a million, 1.14 million contracts to be precise. This was what I was talking about earlier. The hot option yesterday was 55,000 of the March 16 puts. These went up for an average price of about 28 cents. We were curious for you folks. You said, you like these? Are you a buyer or are you screaming sold to you? And it turned out actually unanimous. All of our voters wanted to buy these. So that was kind of interesting. If you bought these yesterday, you're looking a lot better today, I would think. Number 2, 55,000 as well, the Feb 25s. Number 3, 50,000 of the 35s. So it looks like maybe we had some action on that Feb 25, 35, but not perhaps the unwind you might have expected. Number 4, 48,000 of the Feb 22s. Number 5, 45,000 of the Feb 18 puts. Out to Wednesday, 776,000 contracts on the tape, the hot option. 40,000 of the Feb 25s, followed by number 2, 31,000 of the Feb 18 puts. I'm going to keep going because we have a lot to get to. We're coming up against it, and there's a lot of volume to get to. Tuesday was actually a more active day, our most active day of the week so far, unless today turns into a real banger. 1.25 million contracts on Tuesday. The hot option on Tuesday, 53,000 of the Feb 22s, followed by number 2, 50,000 of the Feb 35s, and once again, 46,000 of the Feb 25. So there was action on those two strikes this week, just perhaps not the way you might think. Number 4, really quickly, 45,000 of the Feb 19 puts. Number 5, 43,000 of the Feb 45s. Monday, also a banger, 1.22 million. The hot option on Monday was size print, nearly 250,000 of the Feb 35s, followed by number 2, 210,000 of the March 35s. So the March was definitely opening. It had the whiff of a roll out there, but we heard the numbers today. Number 3, 45,000 of the Feb 28s. Number 4, 35,000 of the Feb 19s. Number 5, 31,000 of the Feb 22s. Mr. Meatball, obviously a wild week in VIX options. A lot of volume flying fast and furious all over the place. What stood out to you, sir?
Yeah, I was a little surprised we didn't see more monetization on Thursday when things were really, really exploding. This one felt, I don't know, did you feel like people got caught a little flat-footed? I mean, I know that, we had seen some upside trading last week, but, I didn't see a lot of, on Thursday at the top, we had traders selling the 37.75 call spread and, some things like that. But I saw more people chasing upside than I saw monetizing. We didn't see any of those huge orders that people had been trading up into this come off on Thursday when the VIX had gotten near 22. And, Wednesday, more kind of buying than selling. I don't know. What did you feel like people got? Maybe there was people were a little more flat-footed than we thought.
I think people were buying this sell-off. I think people were buying this route in terms of they thought this was the beginning of a lot more red on the screen, and they were keeping their powder dry. And I think they got caught flat-footed today with this reversal.
Yeah, maybe.
Yeah, I don't think.
I think they thought it was that second leg thing.
Yeah.
They were looking, and it ended up not being, but it sure felt like
they were looking for that second leg. Or maybe today would have been maybe the third leg, and they didn't really get it.
Yeah, I mean, I just mentioned a trade where somebody was getting long at 22.26. So
yeah, I think
and that would be flat-footed. It'd be like, holy crap, what's going on?
I think people were buying that we were moving into a little bit loftier vol regime, and lo and behold, once again, it was short-lived, at least for this week. Let's go out to the land of the vol ETPs, listeners. SVIX doing a whole heck of a lot of nothing net. Again, if you just listen to the show and that's only vol context you have, you would think not a lot happened this week. 2240 down a whopping 1/10 of a point. Obviously, we did a lot more living in between that on the show. I know some of our pro members, people have been waiting for SVIX to get back into the teens. We got close, didn't quite get there, got into the low 20s. Some folks got some, I know in our pro, we'll talk about it later on oddities, got some good sales off and some SVIX puts out there. So if you got lucky, you had some good opportunities out there. And UVIX back to literally where it was a week ago. In fact, I bought it a little bit lower than this at the end of the show last week. So again, kind of looks like nothing if you look at it on the week. Mr. Rhoads, I know you've been busy crunching the numbers during the show here. What are your results of your now taking your formerly secret weekend trade and doing it, what was it, Monday to Thursday?
Okay, well, I ran the whole weekend trade thing just to do a little update. It's break even for 2025. It was 2026. It was down 0.11% in 2025 on average, but on average, still going back to the beginning of 2022, if you did it every weekend, you'd be up about 0.4% on average every week. Sebastian had a great eye here. If you had bought UVIX on the close on Monday and sold it on the close on Thursday every non-holiday week in 2026, your average return would be 5.5% per trade.
Oh.
However, long term in 2025 and going back to the launch of the fund, you'd average a loss of 0.25% or a loss of 0.5%. So it's a bleeder, but recently it has not been. And with the big spikes that we get every week in the middle of the week, that's why.
I think that's just strategic for right now with the way trading has been, right? They bookend green and then it's red all week right now. I don't know that that's a long-term solution. I think that's just a short-term 2026 thing. It's just a near-term trend. But because they've, what I've noticed is that they've taken out the Monday, the old Thursday, Friday, Monday dump has not worked. I mean, even when we saw off on Friday, the bid is there on Monday. I think either the administration gets worried and Trump comes out and softens its tone on whatever is worrying the market, or people are just out buying the dip on Mondays. At some point that will flip back on its head and we'll get that Monday dump, but that has not come to fruition this year so far.
Nope, not at all.
The new intra-week UVIX trade is the new addition to the mix. Mr. Meatball, anything lighting up your tape in the world of vol ETPs this week, sir?
Not really. I was looking at, on Wednesday when we were kind of dumping, I was looking at ways to go long, and the stock is 2 cents wide, and the market makers markets are 30 cents wide. It's very difficult to trade the options on this, on even like a UVXY that has a ton of volume. So I've not been overly enthused with the primary market makers that have been streaming quotes out in these things. It looks like they don't really want to play.
Especially in SVIX. Wow, my goodness. So if you look at some of the non-standard expirations in SVIX, oh my God. No, we had someone in our chat talking about no bid at nearly $2. Some of these,
you could drive a Peterbilt through those.
Buy 5 of them side by side. It's pretty wild out there. Speaking of wild, listeners, the rest of the vol ETPs are almost literally unched on the week. So let's get to the wild part of the show. Let's get to the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we get weird, we get wild. Let's check in with how the markets are faring at the end of the show here. And we're looking pretty similar to where we were to start the show. S&P up nearly 1.75%, Dow up over 2, about 2.15%. NASDAQ up about 1.9%. And VIX cash hanging out a little bit shy of the 18 handle. We got about a 1795 or so. Let's pull it up, get the exact print right now. 1799 I'm showing right now. So just a tick below the 18 handle, which is not great for me or for Russell. It's hanging out right in between both of us. He's at a 1765. I'm at an 1835, and we're hanging out right around the 18 handle. So VIX cash once again the most capricious of mistresses out there. He giveth and it taketh away, and is taking away from both of us today. I'm sure if you wait 5 minutes, one of us would be in the bullseye seat. Mr. Meatball at a 1661, so no joy for him either. So that means, I guess, tell you what, Mr. Meatball, you get to go first next week. Why not? What are you feeling for this time next week, sir?
All right. Well, we're through earnings. We do have non-farm payrolls on Wednesday of all days.
Yeah, that's weird. Today was supposed to be a jobs number as well. We didn't get it. We're getting it next Wednesday. That's weird too. Yeah.
Yeah. And well, we know Tuesday, Wednesday, and Thursday are going to be bad, but Mondays and Fridays are going to be great. So I am going to throw out 1771.
Ooh, interesting.
All right, so a little bit lower, but I think we got another couple weeks of this annoying chop.
That could certainly be the case. Mr. Rhoads, you and Gretchen want to go next? Do you want me to go next? I'll let you choose.
I can go ahead. 1802.
1802. An interesting.
I know it's so uninteresting when it's just a machine spitting out a number. But
an interesting year, perhaps an interesting vol prognostication as well. So we split the uprights this week, and still getting closer to Mr. Dr. Bix's, but still about a third of a point away. So not quite in our margin of victory. I was looking pretty good until I wasn't today as well. I'm going to say we got a 17. Got two people hanging out in this 18 plus hand. But I don't hate where I am. I hate to put that close. I'm going to give myself a little bit more room. I'm going to say 1835 again. I was going to tweak it up a little bit, but I don't hate where I am this week. It was almost, I don't like to do that normally, listeners, but this week I'm just feeling it. So that's our market. Very tight for vol this week, which means we're going to get an explosion in one direction or the other. I'm at an 1835 to the upside. Mr. Dr. Bix playing the Goldilocks right in the middle at 1802. He would have crushed it this week. And the Meatball at a surprisingly close 1771. All right, that is going to do it for us on Volatility Views today. But before we go, let's go around the horn. Mr. Meatball, we'll start with you, sir. If folks want to check out what you got cooking, where should they go? What should they do?
Yeah, if you want to see my tweet about Michael Saylor, follow me on Twitter or X at Option Pit.
Are you making friends on Twitter again, sir?
Find our YouTube channel. We're Option Pit on YouTube. We're putting out content every single day, so join us.
Check him out, optionpit.com. You can see him tweak people on Twitter all week long. And Mr. Rhoads, if they want to find you and perhaps a drunk weatherman, where should they go? What should they do?
Look for me on Twitter. It's just my full name, at Russell Rhoads. If you follow Option Insider, I'm linked to a tweet about this program right now. And now I'm going to look at what Mark Sebastian said.
There you go. Check them out. 2 S's, 2 L's, RHOADS. While you're checking things out online, check out our friends over there at Tastytrade, tastytrade.com/podcast, the place to go. Every broker wants all the customers, obviously, but they all really want, trust me, they all really want the Vol Views crowd. Head on over there, see what offers they have for you, tastytrade.com/podcast. That's going to do it for us on Vol Views. We'll be back immediately after the show for all of our pro friends talking some fun stuff in MSTR and all kinds of fun popping off on the official after party of Volatility Views, known as Options Oddities. You want to check that out for yourselves. theoptionsinsider.com/pro. Then back again to wrap up the day over there on Thor, aka the Hot Options Report. Then we're back next week, kicking it off on Monday with a little bit of trivia battles before we come back next Friday, another episode of Volatility Views. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. Unlike some guys, Tastytrade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tastytrade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tastytrade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tastytrade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.